Good evening, everybody. Welcome. We'll wait a few minutes before we dive in. What's good? What's good? How's everybody doing? Welcome, mis amigos. Lesson 5, going to be a good one for sure. So we'll chill for a minute or two. We'll allow people to sort of trickle in, and then we will go ahead and dive in and begin. I hope everybody had a good day. The Ray Trades LLC, Dad, let's fucking go. Like all my merch is still incoming in terms of the like clothing I got, besides that first sample order we did. I did get my mouse pad today. Pretty fucking sick, honestly. It's huge though. Beware for anyone who buys the mouse pad, shit's giant. All right, I gotta get my camera back. What happened? Where'd it go? Oh, there we go. Oh, it's a little off. That'll work. That'll work. China's my province. It really is big. Yeah, it's huge. I got to admit, I got to turn the lights up in here a little bit, everybody. Wake ourselves up. So for those who were not able to be on the trade review session earlier today, one of the things that I had mentioned is that I didn't sleep all that well last night. I woke up, and this is just a little side piece of advice that I have for you all. I woke up, and in the middle of the night, especially with an open swing trade, I checked my phone. I checked what prices were at. I was curious at 2 a.m. and I saw that snow was gapping up nicely. The market was moving up nicely. I didn't sleep. I didn't end up falling back asleep very well until my 4:30 alarm wake up time, right? I also have a little bit of a sore throat, which is come over the last 2 days. So I have never missed a lesson in my life. I don't plan on missing one now. But if I'm a little less energetic tonight than usual, that may be why. But I'm going to do my best to push the fuck through and give the best goddamn lesson of all time. We don't stop over here. It's nonstop. We go, go, go. Right. So that being said, tonight what we are going to cover is a review a little bit of everything that we've talked about so far, strategy portion. Right. Again, it's important to me to note to you all, and sort of drill this stuff into your brain and really sear it in there, because I want you to be having sort of memorized this stuff, but not flashcard memorized, but memorized in the sense that like you inherently know how to react to this sort of price action, right? And then the biggest agenda on tonight is to talk about multi-time frame analysis and how various time frames will play in with each other, right? And so this is a very important lesson. It's one of my personal favorite lessons that we have. And then tonight is also sort of like Christmas morning, in the sense that as soon as we're done with this lesson, you're going to get a bunch of recordings. You're going to get a recording to the bonus lesson that we did after Mastermind 2, I believe. You're going to get access to both Mastermind 2 and 3, their version of the multi-time frame analysis lesson. So you're going to have 3 recordings on this one subject and a bonus lesson that I think is my most valuable lesson ever. But I wanted to make sure that we finish lesson 5 before I give you that stuff, so that stuff makes sense. It's not coming out of left field, right? But tonight you're going to have a lot in your sort of repertoire. And I'm going to ask you to go through the variety of those, because what's nice is that we talk. There's one example that I might cover in yours that I've also covered in theirs, and that's a UPS chart. But for the most part, the active chart that I cover will be different in each of these lessons. And it's a really important subject that I want you all to understand well. So I give you access to theirs, they get access to yours on lesson 5 of this multi-time frame analysis. I think it's just the best way to approach it so that everybody continues to learn. So for the mastermind, the next mastermind I do, whenever that might be, which I think I need a freaking break. But whenever that might be, you all are going to have access to their exact same this lesson going forward, right? So this is one that I think that it's important to have like continued learning, because it's a subject that even I am still noticing new things every single time that I look at a chart, right? So that being said, tonight we're going to do a deeper dive on the snow chart. That's going to be the example that we're going to use primarily in this class, mainly because it's a great example. And then we're going to talk about SPY a little bit. We're going to talk about UPS, which is one of my best trades of all time. And then Meta is up there, I think from the previous class. I don't know if we're going to cover the Meta chart too much tonight. But that being said, I am very excited because it should be one that clarifies a variety of different things and sort of how we approach. And how we're going to close off tonight is by defining the 4 rules that we look for before entering a trade, right? This sort of checklist that we want before entering a trade, right? And we're going to hammer that in lessons 7 and 8. But you're going to see and have all the rules tonight. So that being said, let us begin. We have about 51 on. Usually it gets up to about 70. So we'll see if this number increases or if people just weren't able to make it tonight. And we'll go from there. One thing I want to check, can everybody hear me okay? Is the noise not muffled or anything? My mute is a little bit low, or my volume looks a little low. Sounds great. Okay, cool. Perfect. Sweet. Thanks, everybody. Awesome. Let's knock it out. So that being said, as a reminder, we've talked about this again, and we'll talk about it every single time we approach technical analysis as a triangle offense. We are reactive, folks, and I hope that that has been able to be seen by you a bit over the course of the last 2 weeks, is that the way we approach charts is different than the way most do. Most approach them with the mindset of, I am looking for X. The EMA crossover is the best example I continuously think of, where people are continuously looking for an EMA crossover, something to enter their trade, or some MACD cross or stochastic RSI cross or whatever. And that's just not the right way to interpret charts. We are reactive. We have a set of rules that we follow. And within this set of rules is a defensive system built in. Now, this week, me personally, I've been a little bit more offensive, not as much on Monday, but more today, or the swing coming into today, mainly because I thought the market had a nice opportunity to move up, and those are my ideal conditions, right? That's some of the things I've talked about. But that being said, the last few weeks in general, the first 2 weeks you all had in this mastermind were some of the most defensive weeks that I've had in months, right? I was very slow. I was trading very small size. I was just trying to get my rhythm back. I was just trying to stay afloat, right? Because the action was very choppy and it wasn't my ideal conditions. I'm not great at holding shorts. The system allows us to do it well. I'm just not great at it. I think I've just traded too many calls in my life that I'll never be amazing at trading puts. And I'm totally fine with that because the market goes up most of the time anyway. So I trade calls most of the time anyways, right? But the point is that our offensive system has a defense built in. We are going to know when is our ideal conditions and when is not, right? So we as technical traders abide by a certain set of rules. Again, these should starting to be really seared into your brain right now. But the defensive system we have built in, everything that we're going to talk about tonight will all tie back to these rules, right? So markets are always either trending or ranging. We're going to find on that tonight that in various time frames, you're going to see different trends and different, some things might be consolidating on a weekly chart, but they'll still have a 5-minute trend, right? That being said, that doesn't mean that a 5-minute trend is enough to get us in that trade. It's important to always be able to identify, are we trending or are we ranging? Next, the break of a previous candle high or low should get continuation in either direction. That applies on any time frame. And when it does not happen, we need to take that information as a clue, mark it down, and start to react to how it comes. And then lastly, that markets move from level to level. Everything that we do has a purpose. And tonight, I think that will be a little bit more defined even more, because now you'll see that not only do markets move from level to level, timeframes work hand in hand, right? Timeframes really are like best friends. Timeframes get along so well together, whether they are doing it intentionally or not. Sometimes they fight. This is the first time I've ever used this comparison, but it's fucking gold. And I don't know why I haven't either. But timeframes are like siblings, right? When they get along, it's so smooth, right? When you and your brother or sister are getting along, it's such a good time. You guys are vibing. You're having great times. You can talk shit about your parents a little bit, you know, about like, oh man, they're so annoying, you know, blah, 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 blah. But when you're fighting, you're going to come to a head. And usually the bigger one, size-wise or age-wise, in this case, age-wise, is going to win. That happens sometimes. God, this example is so gold. Why have I never thought of this before? But that will happen sometimes, and we'll talk about a lot more examples tonight of this, right? But where siblings are getting along versus siblings are fighting. And it's usually the older sibling that wins, right? That will happen on time frames you see a daily chart and a weekly chart start to clash, usually the weekly chart wins, right? So that being said, there are three pillars to our strategy. First is candle analysis. This is finding a buy or a sell setup or a failure pattern to find us an entry. We talked about this a few weeks ago now at this point. So I'm hopeful that over the course of the last few weeks that, and here's what I'm going to ask for some yes responses on there, right? But have you all started to see over the last few weeks that buy and sell setups occur a lot? They are frequent and they're not always as clean as you would hope them to be. Are you starting to see them a lot, right? But they're also helping you start to understand how trends are moving, right? And this isn't for, I'm not recording, this isn't for Instagram, nothing. I just really genuinely want to know, right? Now, the second question I have is that I'll point another portion of the strategy down here is levels. For all of you, I know some of you will still have questions on levels. Believe me, I didn't understand them until like months after I first learned them. So I don't expect you to have a full grasp and understanding of them yet. But have you seen how accurate these motherfuckers are? Pardon my French, but they're scary accurate, right? Like you've seen these pieces start to come together and start to work in conjunction with each other. And it works, right? The levels work. The buy and sell setups work, right? So these to me, along with trend analysis, these three pieces are everything that we're going to do, right? These are the three pillars. And I wish it was explained to me this way when I was learning it, but it just wasn't. And this is the best way that I found to break it down, is to separate it into these three categories, right? The candle analysis is finding our entry, buy and sell setups, or longer time frame thesis, right? Talk about that more tonight. But the candle analysis is how we find our entries, buy and sell setups. Trend analysis is how we identify whether or not there's opportunities on the chart, right? We look for higher lows to buy and lower highs to short. That way we're always trading with the trend. The other key component of this is multi-time frame analysis, which we'll dive into tonight, which is that trends are different on different time frames. And when you can catch a larger time frame move, like a weekly chart move with a 5-minute entry, meaning that your stop loss is a 5-minute candle, holy shit, that's a powerful, powerful thing. Right. Then lastly, of course, is levels, which is how we find a lot of the theses out of our trades, targets, potential entries, and mainly it acts as a reference point. We want a reference point to guide us as to what the action is telling us, right? We want a reference point to guide us, to give some sort of insight as to, okay, like we know, markets aren't moving randomly. They have a purpose, right? So these levels to us, while they act as targets and entries, and a variety of different things. The biggest thing, the easiest way to think about it for me is this term reference point. It is our guide. It will be our reference point for the day. How are we reacting to that reference point, right? Then we talked about some basic support and resistance rules. You are going to see all three of these come into play tonight. It's going to be beautiful. We have the knock, which is the more time that a level is tested, and also basically the more time that something spends in a consolidative period, the more likely it breaks, and then breaks with power. So when it does get that breakout, it's going to be a more powerful breakout, or if it's a fake out, it's going to be a stronger failure pattern that reverses harder in the other direction. That's our knock rule, right? Then we have the Uno reverse, right? Which is that once a support is broken, it then acts as resistance. Once a resistance is broken, we would expect that to act as support. I have should highlighted there for a very specific reason, because it should, right? It should. It's not necessarily that it will, but it should, right? Now, the last one we have is hit the bodies, which is when we're drawing our support and resistance levels, we like to use the bodies of our candles, not the wicks. I'm hopeful that everybody is getting a little bit clearer and clearer on the levels. We've been answering a lot of questions in the mastermind area. How are these levels doing? I got to give a shout out to Ron and I don't think any other mods are on, but shout out to the whole team, because they've been helping me hold it down in there. But we are responding. We are answering. Some get lost in the cracks sometimes, but if that happens to be the case, please know it's not intentional. Just tag me and if it's been some time, right? It's been an hour, been 2 hours, tag me and I'll happily get back to your question. I think that anytime anyone's done that, I haven't missed a follow-up yet. If I have, just tag me. A lot of questions, but we're doing our best, right? So I encourage you to go that. So next, I have the buy and sell setups here. We're not going to go through these again right now. I want to kind of move on. And it does sound like from everybody's yeses in there that we have a clear, at least understanding of the structure of buy and sell setups that we should be looking for it, right? I'm hopeful that after the last lesson, everybody is more familiar with all of these terms, right? Again, bar is simply the candle that we use. Acceptance is where price is accepting, is or how are we reacting to that level, right? Are we holding above it? Is price action developing a trend above it? Are we really strongly failing it and rejecting it, not accepting it at all? Confirmation for us is the hourly closes. We look for hourly closes through a level to remove it and invalidate it. That acts as confirmation to us, right? A wick for us is what we use as a visual representation of a test, right? So for us, a visual representation of a test or a failure pattern, wick up, there's not a concern for us when drawing where our levels are. Pivots are where the area, pivot's another term for the level, right? Where something changes trend. We're moving up, we pivot and go down. We're moving down, we pivot and go up. Levels are our reference point, like we talked about a bunch. And then reaction is going to be different for everything, right? No two levels are going to react the exact same way. Well, they might, but most of the time, they're not going to. Levels aren't going to react the exact same way. Even something like Netflix today, which we'll review, will have an example of a different level reaction than I would have anticipated, or that most of us would have liked to have seen even on that, but the trade ended up working, right? So that being said, let us move past our review. Again, I know it may seem like, why does he always cover this stuff? It's because I need it seared into your brain. I need you. This is a lot of this trading stuff is art, not science. If this was science, it'd be easy. Everybody would make money because it's X happens, you do Y. This is an art. So I need to sear these principles into your brain so you can start to produce this art form the same way that I'm able to interpret charts, right? So it may seem repetitive on some stuff, but I promise it's all for a point and it all ties back in later lessons. So that being said, when it comes to doing analogies for describing what multi-time frame analysis is, I've been through a variety of them. I had my own houseplant analogy, which was a good one, not bad. I had borrowed one from Eric that was a plane analogy, but ultimately Ron and a previous mastermind student, and all of us had, I think it was someone else who came up, it might have been Ron who came up with it, but we ultimately decided there's a great analogy in the simplicity of a road trip. And that is how we are going to describe to you all the concept of multi-time frame analysis, right? So let's imagine at first that you're on a road trip with your family. You're living in New York at the moment, and you're like, hey, let's go see Rick and smoke a joint. We just had a newborn child. They won't smoke the joint, obviously, but we'll bring them out to California. We'll smoke a joint with Rick while grandma and grandpa watch kid, whatever. You come hang, right? That entire drive, if you were to make the trip in one move from New York to California, that's your weekly chart. That's your largest frame of chart. That's the one that's going to give you the most information. That's going to take the most gas. It's going to be the most meaningful, right? That's the full trip, right? Now, unfortunately, as much as I would love for you to just grind it out and just drive straight to see me, I don't believe any modern vehicles would be able to get you there without stopping for gas, right? You got to take some stops along the way in order to get to me in California to smoke that joint, right? It's going to take you a while to get there. And along the way, you're going to need to interpret some other things. You're going to need some directions, right? Well, one place in the older days before you had a fucking GPS, and this is me kind of ranting on the example. I don't think that Ron gave me this much detail on it. But before the days of GPS, you would need a map to get there. You need old school directions, right? You get those at a gas station. Stops along the way are going to represent your smaller time frame charts. So your first stop, you go from New York all the way to fucking Texas. Somehow you get there, no stopping for gas, nobody. That's a long, big portion of the trip, but you're not all the way there. That's not represented in the weekly chart. That is going to act as your daily chart, right? Now from Texas to Arizona, it's a little bit of a smaller portion, but that's a very key portion of the drive. If you can't get through that Texas to Arizona portion, you can't get to Jake, you can't smoke that joint. That's your hourly chart. Without your hourly chart, you don't got shit. Your weekly, you can try and trade a weekly chart all you want. You want to trade that weekly chart without the hourly. Good luck. Without, you're going to have massively wide stops. You could do a shares, but not with options. Just not possible. You need the power of the hourly and smaller frames, right? You get to Arizona, all is good. You actually take the next stop on to California. That's your 15-minute chart. You get down into San Francisco or some shit. I don't even know where I'm at this point. You get into San Francisco. That's your 15-minute chart, crucial leg of the journey. Then you drive down to LA in your 5-minute chart, San Francisco to LA. Crucial, very aspect. You can't get through the PCA. You're fucked. right? And lastly, from downtown LA, the hell that is, to my place in Venice Beach, it's going to be your 2-minute chart. And that's going to be very crucial to you for another part. So all of them matter, right? You're going to remember that entire trip with your significant other and getting there along the way. Every piece matters, right? But on a grand scheme of things, all you did was make one journey from New York to LA. All you did was have a weekly chart. I personally use the weekly as my largest one. You can use the monthly time frame as your largest. You can use the monthly time frame as your largest, like biggest one. But I personally don't look at the monthly very often. Like once a month, I do it. But I think the weekly paints a clear enough picture for me that I know where things go. So this road trip to Jake sounds great, right? I can't wait to see all of you. Let's talk a little bit more in real trading terms and for what reasons we use each one of these individual timeframes for. Now, what's important is that we always want to consider the larger picture above all else. The weekly chart is always our priority. At the end of the day, if you can't get from New York to California, we can't smoke that joint, right? So you need to understand what is happening on your weekly chart. But Jake, what if I'm scalping on a 5-minute trade? Yeah, you need to pay attention to the motherfucking weekly chart, right? I don't care if you're scalping on a 5-minute chart. I don't care, because if you are fighting a extremely strong downtrend, trying to scalp a 2-minute bull flag, right, then I'm not comfortable with you doing that, right? You're going to need to have the longer time frames agree with you, especially the weekly chart. The daily chart is our bread and butter for individual bar analysis and trend analysis. So I've talked about this quite a bit before, but one of the real things that I do that is like, I believe, a genuine edge as that gives me opportunity to make money in the stock market every single day is that I will look at a daily chart and ask myself the question, what candle would I expect next from this, from a literal common sense perspective? What's the candle that I would expect to come next? Right? That is mainly comes from the daily chart. I do that because I look at it and I say, hey, I've stared at so many 5-minute charts over the past forever long lifetime, right? I'm looking at this daily chart. Hey, we have a big green bar after breaking resistance. What's the most logical thing that could come next? Continuation. We'll talk about that more as we dive in. And I think the individual bar lesson, the bonus lesson that you'll get after this will also help explain that portion of it quite a bit, right? So daily chart is our bread and butter for individual bar analysis and trend analysis. And I love it for daily buy and sell setups, because being able to catch a daily buy or sell setup gives you the opportunity for a potential multi-day swing. And any multi-day swing, or something like, and Snow's an example of this one today, right? Snow didn't have a daily buy setup, but it had the daily failure to go lower. A daily chart pattern yielded like 300% for us, right? Or even higher, whatever the math was. I don't even know. I don't look at percentages, but whatever the math was, we ended up getting that like a massive win from Snow because it was a daily chart move. We're going to dive a lot into that chart in just a few minutes, right? Next is the hourly, which is key to it all. Truth be told, everybody, the hourly is like the bread and butter, not just for levels, but I swear to God, if you just watch an hourly chart, if you just watch it and you focus on what is the hourly chart going to do, there is so much less noise than a 5 or 15-minute chart. Like, you can look back on an hourly chart and just be like, damn, that was so clean on the hourly. Like, if I had just been watching that along with my intraday analysis, I would there's no way I would have sold early, right? The hourly looks so good, right? So this is why I keep up multi-time. This is why I shared my charts with you in lesson 1. I want you all to, whatever is your primary trade at the moment, have up multiple time frames, including the hourly, because it's our bread and butter for everything, levels, trend analysis. What's interesting about the hourly is that an hourly trend break, so a flip from a down to an uptrend in the hourly chart, is generally speaking, no, I'm going to hold off on this comment. I'm going to hold off on this comment. Yeah, we're going to get there in just a second. So the hourly is the key to it all. Levels, trend analysis, basic common sense, what candle comes next analysis, all this on the hourly chart is extremely important, right? Now, from there, we have the 15-minute chart. The way that I use this 15-minute chart is I consider it like a 5-minute plus. It's basically the 5-minute chart on crack, right? Because it's times 3 of a 5-minute chart. So I use it the same way I use the 5-minute chart for management of my trades, for clues, for all that, but also in a few of our previous mastermind students, I know Ron and Margin Call Poppy, who's been crushing it lately in the chat, and Joel even as well, probably all the mods, but just those three off the top of the head have posted recent examples of it, where 15-minute buy and sell setups are what they will look for, especially after the first 2 hours of market open, rather than taking a 5-minute buy or sell setup, because there's a lot more of those each day, which means there's a lot more that fail. If you focus on the 15-minute buy and sell setups, it can be a lot cleaner of action. A lot of people have come to me afterwards in the mastermind, especially because it takes screen time to be able to trade the first 10 to 20 minutes of the day. It'll take screen time before you start to understand the system and see everything before trading those early periods of the day. So while people are getting a grasp on the system, trading off the 15-minute buys and sells has been a great way, a great medium for people. So I highly recommend you guys starting to introduce the 15-minute as your trigger points for buy and sell setups a little bit more. And I'm watching all of these on my main trade of the day at all times. So the 5-minute for me is my main management time frame for entries and exits. It's pretty much my primary time frame for day trading, right? So the difference is for me is that I'm watching the 5-minute for early clues and for insights on what might happen, but most of all of my decision making comes from a larger frame. Jake, we had an ugly 5-minute close under the level that you were watching for Netflix today. Why did you hold? Because we had literally just opened a brand new hourly candle, and I thought there was potential for that hourly candle to fail to go lower in reverse, and that's exactly what it did. Right? So if you were only watching the 5-minute, only paying attention to that, not paying attention to the fact that we just opened a new hourly candle, then that would have been a disadvantage to you whilst in that trade. Now, the 2-minute chart is a little bit dicey, and while you're in the earlier stages of your understanding of the buys and sell setups, and not the early stages of your understanding, because I think everybody understands it by now, but the early stages of you seeing the buy and sell setups in real time and seeing in screen time and all this, I would maybe stay away from the 2-minute chart a little bit more. But that being said, for me, I use it for early analysis, entry and exit. Right? Okay, that being said, we're going to move on here. We have our next slide, which is going to be a huge one. That being said, there's a Mastermind 3.0 student that is messaging me right now. We are in a lesson as we speak. So I love you all, but if you're in class with me right now, don't message me doing this because it'll distract me. Because if it's a Mastermind 4.0 student, sorry, it's not 3, it's a 4.0 student, I'm going to be like, what's wrong, right? And feel obligated to check that. So I think they're going to respond. And I love you, sir, but please try to avoid DMing me during the lesson. That being said, let us move on to our next slide here. I can't ignore it either because I have to shut down all of Discord and I need Discord on so Ron can make sure of emergencies, all that. Apologies. That being said, let us move on here. And this is the portion of the analysis where it might sound a little confusing, but once we dive into the charts, it's going to make a whole lot of sense. And I'm hopeful that this is sort of like an aha moment for a lot of you, right? So when we are using multi-time frame analysis, it's important to understand that the larger time frame will always reign supreme. However, time frames are always impactive of each other, right? So let's think about this. If you have a weekly uptrend, right? And it is a strong weekly uptrend. It's moving. There are 5 daily candles within a weekly uptrend, correct? 5 daily candles within a weekly uptrend, right? In order for that weekly chart to get a pullback, let's say it's in a weekly uptrend and it needs 1 to 2 candles to pull back, maybe even 3. Well, 3 weekly candles of pullback would mean 15 daily candles within that time. So in order for the weekly chart to get a pullback, the daily chart would actually have to shift trend here and shift into a downtrend. Doesn't have to, but 15 days is a lot of time, 15 candles. Holding an uptrend for 15 bars while the weekly is getting a pullback is a hard thing for me to imagine chart-wise, right? And we'll look more at specific examples of this later tonight, in just a minute, actually, right? But then if you think about it as the daily chart, which is in an uptrend, right? In order for that daily chart, which at the moment in the beginning of this scenario is in an uptrend along with the weekly chart, in order for it to start to shift into a downtrend, it's going to need the hourly chart to break into a downtrend. Spoiler alert, the hourly chart would require the 15-minute or the 5-minute chart to go into a downtrend first before breaking into it. So all of these charts are impactive of each other, right? And a lot of times, in my opinion, they are doing things simply to satisfy each other. If you're looking at what is happening on a chart, a lot of times the logical and reasonable rationale is because one time frame needs something, right? Like an hourly chart needs a higher low. Why did something pull back today on a 5-minute and flip into a downtrend? Maybe the hourly needed a higher low or a double bottom to just sort of ensure that strength, right? Well, think about that, right? You're in an hourly chart. And on an hourly chart, there are 7 hourly bars on there for each individual given day, the last one of them being just 30 minutes because the market's only open for 6 hours and 30 minutes. Within each one of those hourly candles, there are 12 5-minute bars. 12 times 7 is some high number. I think it's 78. Maybe. I don't know. Math is not my strong suit, even though I'm a day trader. It's 12. Yeah, whatever. That's a lot more than the 7 bars that we have in an hourly chart, right? So in order for that hourly to get into from an uptrend to a downtrend, it's first going to require a clue on the smaller time frames. So while the larger time frames reign supreme, the smaller time frames actually give us early indications and clues that could potentially get us these large moves, right? Let's say you catch an hourly trend break, which we kind of caught on Snow a little bit. That's going to then potentially lead into a weekly or daily chart move, right? And that will give you massive rewards on a weekly options contract, much like we saw today, right? So that being said, I believe we have one more. No, we're going to come back to this after the charts. Okay. Yep. So we're going to pause here. Stop share. Not pause, not water break, pause. Not yet. I'm going to reshare screen. Ron, I'm checking team chat real quick, just with you and you. Are we good? You need anything? Everything good? Let me know. And we are good, I believe. Okay, folks. Never messaged me, but I think we're good. I think I only know meant something's wrong. You're good. I see you now, Ron. We're good. I was just saying if something's wrong, let me know in there or in there. We're good. Everything is all good, right? So let's look back at this Snow trade and start to truly dive into what was the opportunity that we had that really gave us an edge on this one to make a massive return, right? So first I'm going to remove some of these levels here, right? And I'm going to flip and we're going to start with the weekly chart on Snow. All right, we're going to start with the weekly chart. And while this one is a little bit tricky, let's just mark out just a few of these recent structural points to give us some guidelines as to how Snow is moving, right? Now, here we have a lower low. You could also add, I'm not blocking everything. There was another lower low right there. Right here as well, we have a lower low, right? But on Snow, you can make the case that by breaking over these two areas, the weekly chart is now making higher highs and it's setting higher lows, right? So this is the only portion of trend analysis that I will say can get a little bit dicey in terms of understanding what is the current trend. If you were to ask me, is Snow in a longer time frame uptrend? I don't know. This is still a pretty significant lower high here. And while we've had a nice move up, breaking over some previous lower highs, setting higher lows along the way, right? This is still beaten down from 429, right? With a tough structure ahead of it, right? That being said, what we are looking at the moment is what I will define as the forward-looking trend. If we're looking at this from a forward-looking perspective, we are currently breaking new highs and setting higher lows. So at the moment, on the hourly, we have an uptrend, right? Here you can see we have a higher high. Here you can see we have a PLH, a potential lower high, right? And with this potential lower high, we actually pull back here. And with this week's action, which happened on Monday, is where this wick down happened, this put in what we are going to define as a, at least for now, a failed lower low. Right? Now, we talked about this when we did lesson 3, but I'm going to expand on it a little bit more right now, right? This is by definition a lower low, right? We do sweep lower than the previous pivot here, right? We do go lower at that point in time, which would be, by technical reasons and technical definitions, a lower low, right? But the reason I'm including an F in front of it is because it's kind of like a failure, right? Like, yeah, we got the lower low, but we've had such a strong reaction that it's not really a lower low, right? It's a failed lower low. We've potentially failed to go lower there, right? So with that being said, if we're taking a look at the weekly chart here, when we got this spike down in snow on Monday, pull over another chart here. When we got this spike down on Monday in snow, we had actually taken out the previous week's low, which I'll mark right now. We had taken out the previous week's low, and I would define that as a strong reaction. Wouldn't you, everybody? I'm not saying this isn't a level necessarily. Of course not. That's not an hourly level from the system, but it is a reference point that we're keeping an eye on. The previous week's highs and lows always are. If you've paid attention to any of the Sunday webinars that we've had, I've spoken a lot about how previous week's highs and lows will naturally come into play, right? So initially on snow, we're going to start looking at this from a few different frames, right? And start to analyze what was the clue that gave us this indication. Because if you're looking solely at the 5-minute time frame here, on the day that we took entry and where we took entry, we were still technically in a downtrend, right? We were still in a 5-minute downtrend, even at this oval over here, right? But at this point in time, the weekly chart had started to give us this clue that we were failing to go lower, right? And that we were failing to hold underneath the previous week's low. So during the decision-making process of entering this trade, that came into play for Ron, Joel, myself, right? It started from a weekly time frame, right? And us understanding that, hey, the weekly chart may be failing to go lower, right? This is something that we've identified is in an uptrend, right? We've put in a potential lower high on the weekly chart. So if we break this low, we should get continuation lower, correct? We should, in theory, continue moving down, correct? So by getting such a strong reaction back over it, that gave us an indication and a clue that, hey, this larger time frame might be telling us something. What can we start to grasp from the smaller time frames on this and see if there's any other pieces of information that correlate with each other and that agree with each other? From there, you flip down into a daily time frame, which is always next to us. And with that spike down, even before this candle closed green, even when it was red up here, you can see that it had started to fail to go lower, right? It had started to fail to go lower into this sort of gap area, which wasn't a gap on the weekly chart. So that wasn't really a huge part of my decision-making process, but it could be, right? And I think we did fill the gap technically, right? But we had such a strong reaction there that the daily chart had started to indicate to us the same thing, right? If this these markings of higher highs, higher lows, lower highs are much easier visualized here on this daily chart, right? The higher low there, it would have been a P higher low until, but now we can confirm it is a higher low. Same with this higher low here, right? Then we have this power move gap up here. We do establish a new higher high. So the daily is in a forward-looking uptrend. We have higher lows along the way and higher highs. But this one was the first potential lower high on both the weekly and the daily frames, meaning that if we break through the previous low, based on what we know as price action traders who have a set of rules that we follow and abide by, in theory, what should have happened is that should have continued moving lower, right? When we broke through that support of this low and this previous low, we should have continued moving lower. But the daily frame said, no, 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 right? We're going to fail to go lower and start to move up. Now you start to flip this down and we're going to drill even further down on the chart, all while having our weekly thesis up there, right? On a weekly frame, if you, excuse me, on the hourly frame, let me mark this as a specific. Right, on the hourly chart, looking at what we had started to see, while this hourly bar is tough, what we ultimately see is while we did break beneath one support level, we held hourly support and had started to fail to go lower. Right, so on this chart, all these things are starting to line up for us and starting to give us these clues and starting to be indicative to us on both the weekly, the hourly, the daily. All three of these are giving us these indications that we might be putting in a new swing low with that exhaustive move down. Even drilled down to the 15-minute frames, right? With this strong of a 15-minute candle and the way it was followed up, and this strong of a 5-minute candle, right? It's not all that surprising that we ended up getting this power through move, right? That being said, just being able to recognize that we had a potential failure to go lower and all these different frames, all that isn't enough to be able to be like, I understand multi-time frame analysis, blah, blah. No. I want you all to understand how these frames work in conjunction with each other. So first things first, we're going to look at the frame that got us the entry on this trade, which was during this consolidative area right here. Now, I was willing to take this a little bit right there, right? I was willing to take this position on right here, looking at as a potential higher low being put in with this wick down and that break back above that bar. And I was willing to give a little bit of room on my stop in case they did a little trap, which they just did. But at this point in time, up until right here, we are in a downtrend on all frames, right? Except the weekly, which still might be an uptrend. But at this point in time, the daily, while it's giving us clues that it might be failing to go lower, is still in a downtrend and is still spiking down. The first indication that we get from a chart perspective that holds, that truly indicates this, is right here. Because right here, we get a PHL that turns into a higher low for us on the 5-minute time frame. Now, at this point in time on the hourly, were we in an uptrend yet? Not really. We were more in a range. I would describe this as a range more than anything, right? I describe this as more of a range than anything. But we had a failed high there. So on a failed high that broke lower, we would have expected continuation lower, right? But we're still not really with an hourly uptrend, right? But for the first time, this 5-minute chart is giving us indications that we are going to break the 5-minute trend and flip that, right? The 15-minute started to do the same thing. It was just a little bit structurally different. The 5-minute flipped the trend during this 15-minute candle and then held on a pullback. and then held on a pullback here. But with this bar here, we break trend, we flip the trend back into an intraday uptrend, right? Now that we have are making higher highs, right? This is a higher high in reference to these previous potential, and we'll call those start with PLHs. Right, these are all our potential lower high areas up here. They get removed and they get erased because obviously we ended up breaking above them. So they ended up not being lower highs, right? So we get this move up to a higher high. Then we get a pullback here on snow that consolidates for a while, but then ultimately acts as our next higher low, right? You can see, as I mentioned though, in order for the larger time frames to flip trend, it starts with the smaller time frames, right? And so in order for this 15-minute and then hourly chart to flip trend, it has to begin with the 5. So if we flip this one to a 15-minute and look back on it right here, right? We're going to move this oval. I'm going to move it to the point in time where the 5-minute flips trend. 5-minute does that right around here. Right there is where that pops up. Is that where the 15-minute flips trend? I wouldn't necessarily define it as such. Now, we do get a failed 15-minute sell setup, right? This was the trigger that could have attempted to go lower and failed. So you could argue that this is the higher low on the 15-minute chart. But just for our purposes, let's say that we're going to consider this just an extension of this move up, right? So this is our first. All right, so on the 5-minute basis, we have a higher high over there. I'm now going to change this to a new drawing set. But on a 15-minute chart, right, this is still in a downtrend. Right? This is still a potential lower high within this larger move down, right? So earlier tonight, I mentioned about how the 15-minute is kind of a headache saver, and that even I wish I used it more on later on in the afternoon, right? But the reality is that if you tried to take the 5-minute trend flip or buy earlier on during the 5-minute, which I did, given that I just wanted to get an entry because I thought the risk reward was so good anyways, which it turned out being, so it worked out. The safest thing to do would have been to wait for this 15-minute buy setup. Because on the 15-minute chart, we do not flip trend until putting in enter higher low here that ends up breaking out to the upside. So the clue that we should understand and grasp from this a little bit is that the 5-minute chart was our early indication, like we talked about, right? In order for the daily chart to get the trend flip, first, the 5-minute chart has to get the trend flip. Then the 15-minute chart has to get a trend flip, right? It has to get a trend flip. I'm not saying that these are, let me pause this for a second. I'm not saying that you need all these things to happen in perfect order to get a trade with that you can. We'll talk about our rules once we circle back a little bit later tonight. But in order for structurally speaking, in order for this 15-minute chart to get back into an uptrend, right? It first needed the 5-minute to get into an uptrend. It first needed the smaller time frame. Guess what? If I were to put the 2-minute over here, the 2-minute flips the trend probably a little bit earlier than the 5-minute did, right? In this example, it didn't, but in plenty of other examples, you'll find the 2-minute flips the trend first. And that is why I'm always at least watching the 2-minute chart, is that I'm always cautious and paying attention to what is the trend on all of the time frames, right? On all of the time frames sought together. Now, we're going to go over and keep this 15-minute here. And now we're going to look at the hourly chart on snow, right? So again, we're focused on this day of action right here, right? And now this is the point where the 15-minute chart starts to flip the trend to the upside. And from there, it becomes a gorgeous, strong move up, right? Now, has the hourly chart at this point in time flipped trend yet? The answer is no, right? The hourly chart, if we go to the 15-minute, no, that is, I think it's L. Yep. The 15-minute, at this point in time, at this arrow, is not when the hourly had flipped trend yet, right? But it was, a little 1, 2, 3 pattern, right? That we had seen sort of start to play out. Now, this is not the cleanest of 1, 2, 3s because there's this big red bar here first, right? But it is inside bar, 2 inside bars back to back, a double I pattern, double I, 2 inside bars back to back, right? That ends up getting out the breakout. So if you're watching all of these different time frames, right? If you're watching all these different time frames at once, you're able to see the 15-minute buy setup triggering while you can see the hourly start to put in a potential green bar here off of a double inside bar pattern. More and more clues are starting to come to fruition. That being said, even this move up that we had later in the day in snow was not enough to flip it into an hourly uptrend. This was the hourly low high. We had a level right here. Let me actually switch back to trying to set hourly. We have a level right there. I don't know if that's exact because I don't know if I don't open that. Right, we have a level right there. So by not breaking back above these levels, technically snow still closed the day in an hourly uptrend, but it had closed the day in a 15-minute trend. The earlier and smaller time frame trends can start to act as a clue for what is going to happen on the larger time frames, right? So getting these 15-minute and 5-minute flips of trend in conjunction with the daily time frame and weekly time frame potential failures to go lowers was enough for us to be looking at long entries and saying that we're getting a lot of things working and looking like they would be in our favor for snow longs. And to be honest, I believe if the market, and this is the tough part, is that the market is in a bear market right now. So all these rallies are not really to be trusted all that much, right? But based on this chart, the hourly has just flipped into an uptrend just now, right? We just got back above these lower highs and out of this range. The hourly chart has just now flipped into an uptrend, right? It is just now getting to the point where we are, and you can see that, I believe, is indicative of how snow reacted today with market. Snow, while it had some intraday pullback, it closed at high a day, and it closed extremely strong, holding its strength. And in my opinion, why is because the power of that hourly trend break, that hourly flip to an uptrend, ultimately said, this is the power I need in order to have a strong daily close, right? Like this hourly trend break is going to hold, and we are going to hold this green bar up here. It's not going to fail, right? So now let's look at a little bit of today's action on snow, right? Today's action on snow, because it gapped up so much, it was a little bit exhausted earlier in the morning. I believe it didn't really get much of a massive upside follow through, right? But if you take a look at the 5-minute chart here on the left and the hourly chart on the right, you can see that there are clues from this. There are clues from this 5-minute chart that help out and give, from this hourly chart that could have saved you a headache had you been stalking this one all day or looking for new trade opportunities on it, right? So this isn't the best example for trend because it doesn't really have all that clean of a trend early on in the morning, but this is a great example of failure to go lower, right? So we have this kind of bull flaggy pattern. I've never draw patterns, so I wouldn't have had this drawn. We have this bull flaggy pennany pattern coming up, essentially a flat top resistance here, right? And we are holding higher lows, which would lead me to believe that we are going to get a breakout, right? Now, even when that fails, right, from there, using the opening print as your guide, right? Or actually, let me pause this by saying, I was going on the wrong little tangent there. Let me stop. Once we broke down underneath and failed this sort of breakout, right? And I'm going to ignore the trend lines because I don't even use them. It makes it easy to visualize sometimes. But once we failed this breakout, here you can see we have a failure to go higher pattern, right? We have all the reason in the world to break out and rally up higher here. We are holding higher lows. We have a flat top resistance. We're in this bull flag. We've been strong all day. By failing to go higher here, this ultimately led us to a larger move down. You can see right here is the point in time where the 5-minute chart had flipped trend. The 5-minute chart loses its higher lows here and starts to pull back. Now, one of the things that I talked about in, hold on, sorry, my throat's hurting a little bit. It's hurting a lot right now, to be honest with you. One of the things that I had talked about earlier on tonight, and I really was excited to circle back to, was that I believe, much like our rule of markets move from level to level, markets also move with a purpose, right? And these time frames move in conjunction with each other to satisfy each other, right? So let's take a look at snow. Snow from the previous day low at 166, 161.55 up to today's high is a 13% move. 13% in essentially 1.5 trading sessions. That's big. That's a big move for anything, even especially something that has no earnings catalyst, no nothing like that, right? It had a strong chart, but that's a big move up. In this hourly had made a large move, 13%, right? So it's possible that even after flipping and breaking back into an hourly uptrend, the hourly needed a pullback. It needed a pullback. Whether that's 1 bar, 2 bar, 3 bar, 4 bar, we don't know. We react to it, right? But it needed a pullback. In order for that hourly chart to get a pullback, the 5 and 15-minute charts needed to flip their trend, right? You can see that we had been getting a higher lows all the way up here, right? I don't want to mark these out all that much, but we should. We'll just mark it out, right? Just for everybody's clear understanding, right? And these are all PHLs. I forgot to write that on those first two, and I don't want to go back and edit them. But these are potential higher lows because none of them have actually broken the higher highs yet. So they're all PHLs, right? They're all PHLs. Then we get this failure to go lower, and right here is where we get a lower low. Right? And this 5-minute trend has flipped. And ultimately from there, we see a rather aggressive pullback in snow beneath the opening print, right? And breaking beneath the opening print, given the strength that it had was whoa, like I was like, whoa, kind of like I wouldn't have necessarily expected that, right? But that being said, this 5-minute chart has flipped the trend. At any point in time, does snow really flip its hourly trend? No, because snow, before this green bar stops and pivots here, see if we can kind of scroll back. Yeah, if this is all we see on snow, right? This is still a higher high based from right here on our forward-looking trend. This is still a higher high, right? So snow can theoretically pull all the way back to these previous levels and still hold as a higher low and still hold that forward-looking uptrend, right? So at the point in time, even though it was starting up beneath the open, the hourly had not flipped into a downtrend. It was simply receiving a pullback. It was the 5 and 15-minute charts, though, that were receiving a flip into a downtrend, right? These ones were receiving flips into a downtrend while the hourly was pulling back, right? This hourly ends up failing to go lower beneath the low of the day here. We do get a close beneath the open, but that is quickly and swiftly reverted back up, right? So this is really the main idea of technical analysis, multi-time frame technical analysis, although there's like a million. And that's why this is just one example. And that's why I'm going to send you the other mastermind classes lessons, is because there's a ton of different ways to this example. It's just too much stuff to cover in a lifetime, truthfully. But this is a really big takeaway that I want everybody to be relatively clear on, right? This hourly chart had made such a strong move up, 13% in 1.1 trading sessions, right? From 7 a.m. to 7 a.m. the next day, one trading session. That's such a strong move up that it needed a pullback. The hourly needed a pullback. And so in order for that hourly to get a pullback, the 5-minute chart had to flip into a downtrend, right? Now we can start to take clues on this from the 5-minute chart here. Let's take a look, right? The 5-minute chart sets a lower low here. Now it could have held the open, and it could have acted as a failed lower low that started to react and push back up and ultimately been more of a double bottom. But at the current point in time, we are marking this as a lower low beneath this previous lower low, right? From there, we sell off more. We get another lower low here. Then Snow rallies back above the opening print. And something I should have marked is this was a lower high. We hold the open, we bounce, and then we set a sell setup that acts as our lower high. That would have been a short entry if you were bearish on this name. And you would have thought, so, hey, Jake, just because the hourly is pulling back, did we know that this was going to hold? Did we know that this was going to hold as a higher low? I don't know. This thing could have gone all red bars down there, right? On the hourly chart. If it goes all red bars, then obviously I'm not interested in longs again, right? And I don't buy any of it. And also the 5-minute chart hasn't flipped trend. Well, this 5-minute chart caused, in my opinion, not caused, but yeah, caused this 5-minute downtrend caused the pullback on the hourly, right? Well, this flip here, when Snow flips back above the lower high, puts in a higher high there and a potential higher low here, and then breaks back above. Well, hey, guess what? Snow is back in a 5-minute uptrend, right? Which drawing says is L. Right? If you see that oval here, that's right about here in the hourly chart, right? So this would be an example, everybody, and this is going to be a concept that's going to take you some time to grasp, and we're going to cover it more, and there's more coverage in it, specifically in Mastermind 2's multi-time frame analysis. They have a very in-depth example of this, but does everybody, and I'm going to pop out the chat box for this right now. I know there are going to be a few questions that I'm not necessarily answering yet, but I want everyone to answer this for me. Do we all in general understand how this oval right here that I'm highlighting, do we all understand why that's a potential 5-minute buy setup? Or is a 5-minute buy setup, really, right? That's where we had made a higher high, pulled back to a potential higher low. That puts in a potential, a 5-minute buy setup, right? Well, what's the definition of a buy setup, right? The definition of a buy setup in an uptrend, look for a pullback to establish support, take out previous bar's high. Right? Now we can all see that happening real in live time right there, right there. Now, as you're watching that on the 5-minute chart, look over, and put this back on hourly, and that oval was about right here on this hourly chart. Now, if you're looking at this hourly chart and looking for a buy setup, do we see how this 5-minute buy setup preludes this hourly buy setup, right? You could take this 5-minute chart buy setup, right, with the theory and with the hopes, right, and with the plan of this turning into an hourly buy setup, right? Because an hourly buy setup is in an uptrend Look for a pullback to establish support and take out previous bar's high, right? Well, look at this on the hourly chart. That's a breakup, right? We got an uptrend, check one. Look for a pullback to establish support, check two. This is a green bar starting to form here. Hey, whoa. If we break above that green bar's high, that's an hourly buy setup triggering. And while this hourly candle is forming, you can look at this oval. It would be at the oval at the time. We would not have a full clear image. We would not be able to fully see what is in that oval, what is coming from it yet, right? Let me do this and see if this works. Right? We wouldn't be able to see how that oval was planning to close, but you can, oh, here we go. We don't know how it would react to it, but you can see that starting to form. This would be an example of taking a 5-minute buy setup within an hourly buy setup, using these two in conjunction with each other. Why, Jake? Why are we doing that? Why wouldn't I just wait for the hourly buy setup? Valid question. You would have absolutely more confirmation by waiting for the hourly buy setup. I have nothing to disagree with you on that. However, this hourly buy setup means that your stop loss is beneath this candle's low, right? Excuse me, is beneath this candle's low. That is a $2.50 stop. Not bad, given that you could target up at like 188 for this. That's okay, that's reasonable. But what about this stop? This bar is a 50-cent stop. And it has just as much valid reason for taking a long entry here, given that it's a 5-minute buy setup. We're back above the open. We flipped the intraday trend, and we can see the hourly buy setup forming. We can see it. We can see that we're taking a 5 within the hourly. Normally, when I give this example, and from I believe it's Mastermind 2, we're gonna do an example deeper on a 2 within a 5, right? But this is an example of a 5 within the hourly, which means that if you're targeting this level up here, let's say, you got one up here, 185.38, right? If you're targeting 185.38 and you take your long entry at 180.72, let's just pretend it's about, yeah. So that is, what was that? $4.50, $3.50 away, $4.50 away, or $3.50 away, whatever it is. Yeah, not before. Yeah, sorry, $4.50 away with a 50 or 60 cent stop loss. If you take that same trade using the hourly buy setup, all of a sudden your risk reward goes from like a 4.5 to 1 or whatever it was, or 7 to 1 or whatever the fucking math was. Not good at math when I'm presenting. Your risk reward is increased significantly, but your rationale for the trade is the same. You're looking for that hourly buy setup to trigger, but you're taking the 5-minute within there. Hey, guess what? If this 5-minute buy setup fails and starts to reverse down under the open, then the hourly chart buy setup is going to fail, right? Not is going to, but is more likely to, right? It always could be that this one fails, then snaps back up before the hourly close. That should happen sometimes, right? But given this 5-minute buy here, if I was around later in the day, I for sure would have taken this. I had just fucked off and I was done for the day. I wasn't trading this point in time, right? But, right, that 5-minute potential higher low ends up being the buy setup that triggers on this hourly, and that I believe on Snow will take us up to at least 185.38 and potentially 189.07. I think that's a very reasonable target for this week, which is crazy because I should have held some runners on this trade. But even if I was going to hold runners, Jake, you hold runners through this? We manage our trades based off the 5, 15-minute, 2-minute trends, right? I don't think I would have held runners or held anything through this big of a trend change and this aggressive pullback of a move down. Would have been the time and place to look for a new entry rather than bail, right? Where would I have closed my runners? If I closed mine a little bit earlier in the day, but if I was basing it fully off the 5-minute trend, I would have closed them right here once we broke down to a new lower low. We'll get more into trimming and trailing, and that's in a little bit of a later lesson. It's too much to add on to tonight. But I'm hopeful that does everybody, I don't expect you to fully understand it 100%, right? But does everybody clear on seeing the 5-minute buy setup form here, while it's also in the process of forming on the hourly chart? Does that make sense? A buy setup is forming on a smaller time frame while in the process of forming on a longer time frame. That is going to be a very, very, very powerful tool. It's going to take you some time to understand a little bit more, but truthfully, I think that's one of the better explanations I've done of it. But the way that we often use this is within a 2 and a 5 minute as well, right? And again, one of the previous multi-time frames that I want you to watch them all. It's important to me that you do, right? It's important to me that you watch all these other ones, not necessarily tonight, but just in general, right? We pause and take a breath there. But that I'm super glad that that's clear to everybody, because that to me is like one of the most powerful skills that you're able to have, right? Because if you can notice and think about the risk reward you can get for a trade like that on snow, that's a month making trade, right? Especially with the probabilities of how that thing looks, right? So all that to say, the hourly chart, and my snooze thing is going to go off here in about a minute, and then we're going to take a break, right? But this hourly chart, while it got the pullback, the daily chart was simply putting in a little bit of a wick and retesting a previous high. This gap up could be so big that the snow, in order to digest it and make sure that it doesn't fail, needed to go down and test and confirm that there were still buyers up there. In order for that to happen on the daily, in order for that daily chart to simply get a wick, right? In order for this daily chart to simply get the wick that it may need, the hourly chart needed a pullback. That means that the 15-minute chart needed to flip into a downtrend. That means that the 5-minute chart needed to flip into a downtrend, right? And then later on in the day, I believe that the daily chart on snow was so strong, right? That failure to go lower, everything we just talked about, right? Let me get this, right? The daily chart needed a wick down. In order to get that, the hourly needed a pullback, and the 5-minute needed to flip into an uptrend. We're going to write that down. Why did snow pull back today? Daily wanted to test lower and confirm. Hourly needed a pullback. 5-minute had to flip to downtrend to make that happen. Right? So why and how did snow pull back today the way that it did? Well, the daily wanted to test and confirm lower, which means that the hourly needed a pullback, which means that the 5-minute had to flip into a downtrend in order to do that, right? Well, right? Now let's ask ourselves, why did snow rally so hard into end of day? 1, the daily / weekly failure to go lower pattern was so strong that it took hold, right? The hourly received a pullback, then triggered a buy setup. I'll post all these in text lessons. The 5-minute flipped intraday trends, allowing for the hourly. So why did snow rally so hard into the end of the day? The daily and the weekly had that failure to go lower pattern that was so strong for us, right? That was so important for us. Such a powerful move. The hourly had then received a pullback and triggered a buy setup. And what gave us that clue, allowing for the hourly to make that move, was snow flipping into an intraday 5-minute uptrend, right? So all these things work together. That's why we got the pullback. So when I say that markets have rationale, have reason to what they do, this is what I mean. And this is how we can explain it and how it's actually reasonable and rational and explainable, right? Why and how did Snow pull back today? Right? The daily wanted to confirm that test order. The hourly needed to pull back. The 5-minute flipped into a downtrend to make it happen. Right? Why did Snow rally so hard at the end of the day? The daily and pattern was so strong that it took hold. The hourly received that pullback, then triggered the buy setup, and the 5-minute flipping of trend is what allowed that to happen. All right. I know that was a lot, but we're going to take a very brief, like 2-minute break. And then I'm going to come back and I'm going to see, I see a question from YSG here, right? That I will actually leave. I'm going to pause before we take this break. I'm going to answer this question here. I know Ron's typing it, but I'll just answer because the answer is screen time, but also I asked all this question. I asked this earlier kind of intentionally. This oval was the 5-minute buy setup. During that oval, this was the green bar that we were having that was setting up doing it. That oval occurs during this point in time, this price structure. It's actually a little bit higher, right? Now the candle hadn't closed yet, but do you see how that would be forming an hourly buy setup was the question I asked. Do you see that as it's forming? Yes. You can see the hourly, yes, also hourly failure to go lower, but so the hourly failure to go lower is another check mark and clue for us, right? But also with this green bar, while it hasn't triggered yet, you can see that it's forming, right? You can see that it's forming after a 2-bar pullback. With this green candle forming, even though it hasn't closed, you can see that it is forming. And guess what? You can also see just what we had listed a second ago, that the 5-minute had flipped trend, right? The 5-minute had flipped trend and was now getting. So if the 5-minute had flipped trend, that's the first clue to the hourly having made that move. Right? But the real answer to your question is you can see it forming, right? You can see this hourly buy setup forming and you're taking the 5-minute one. So that's the trade-off that I kind of talked about this a second ago, but that's the trade-off, right? You would have more confirmation by waiting for the hourly buy setup to form, but you have more and better risk reward by taking the 5-minute buy. And that is one of the powers of our system is by taking one early in anticipation of a longer time frame one forming. Again, YSG, I know that was a little confusing for you based on your question, but I asked the question to the group. It's like a couple minutes earlier, and it seemed like everyone had understand. I just started to understand. Again, it's going to take you screen time before you can start to predict this stuff like naturally, right? But today is an example of how you for sure could have seen hourly starting to trigger that buy setup, right? And if the 5-minute fails there, then you bounce. Right? All right. Let's take a water break. I gotta pee. Hoo-ha, you can do on Thinkorswim. It's called on demand. It's in the top right feature of your top right thing. You can go back in time and look at it. Yep. All right, gang. I'm gonna pee real quickly. We don't have too much more tonight. We've probably got 10, 15 minutes left. And then we'll wrap up. All right. BRBs. Welcome, friends. Let me place my food order. Getting burgers tonight. All righty, folks. With that being said, I had veggies all day, Walter. Don't yell at me. Okay, I'm closing the chat box for now. With that being said, we're going to do a little bit more tonight. We're not going to cover the UPS chart tonight. I'm going to do that one on a future lesson. My throat is really getting sore here. But the other thing I want to mention is there is a very specific reason why I give you access to Mastermind 2 and 3's lesson of this one. Why Mastermind 5, 6, you'll get this lesson. This is an ongoing topic. So while I understand, I might have explained it. I think I explained it pretty clearly on this snow example. Understanding multi-time frame analysis is going to be an ongoing battle. So I don't expect everybody to have a perfect grasp of how to use all this stuff in conjunction with each other now. I don't expect you to have the screen time to be able to understand it all now. But I promise this is going to be the puzzle piece that really ties everything together, right? That being said, what I'm going to do now is we're going to stop share. I'm going to minus this out, charts out. And real quick, what I'm going to do is load back up our slides. And we're going to go through 1 or 2 slides real quickly and then paste those rules of those slides back onto the Thinkorswim screen. Okay, can everybody see the mastermind chart? Not chart, PowerPoint? Perfect. Okay, so with this, right, again, just to sort of reiterate in this brain, the primary focus for you all needs to be on the longer time frame. If you were watching only the snow 5-minute chart today, it would have been very easy to trip yourself up into not looking for long entries after the 5-minute flipped into a downtrend, right? But the longer time frame hourly was always suggesting to us that we were holding and that this move was potentially going to rally back up, right, and be a bullish move, which it ultimately ended up closing that way. So the longer time frame focuses for us are for overarching trends and identifying potential larger moves, and this includes the hourly chart. And the smaller time frame focuses for us are on entries, exits, and trade management, right? And we'll talk more about management in lesson 7, I believe it is, right? In terms of how to manage your winners and losers as they're going up and down and et cetera. Losers is just the stop, right? But when in doubt, my friends, zoom out. When in doubt, zoom out. You will always have a better result and better understanding of the chart if you zoom out. Right? So in the early morning sessions, I personally like to use the 2 and 5 minute for buy and sell setups. This will come with time for you all understanding the system. I think that earlier on in your understanding, it's a little bit easier to do more 15-minute plus the 5-minute later on in the afternoon or at post 8:30 a.m., post 11:30 EST, right? And for swing trades, I'm looking at the daily, weekly, and hourly primarily, right? Now, let's tie it together a little bit, and we will cover this slide plenty of times before the rest of the class is over. But these are our 4 rules when we look to enter a trade, right? I'm going to trade. I always forget to edit this one. Trading trend flips. Wait for the setup to trigger. So we have 4 rules primarily that we look for when entering a trade. The first of our rules is that we like it to be near a level or the opening print as a reference point. We prefer to have, not prefer, almost require, except very limited circumstances, a level or the opening print as a reference point for us. That way we're not just gunslinging on every single buy and sell setup that we see, right? The second of our rules is that we like to trade with the trend. The majority of our trades are with trend, and on rare examples, they will be counter trend on smaller time frames, but usually with trend on larger time frames. An example of that today would be Netflix, right? When trading trend flips, which is what we do, potential higher lows or potential lower highs, we wait for that setup to trigger with a buy or a sell setup. And above all else, this is why multi-time frame analysis is so important. We want time frame confluence, which essentially means we want these time frames to be in agreement with each other, right? So let's go ahead and do this. We're going to copy and paste these 4 rules. I'm going to then stop share. going to revert back to the snow chart here. And I'm going to share this screen. And this is how we'll wrap up this evening, right? Let's look at this exact example that we talked about later on in the afternoon, right? Going to make this level green so we know it's the opening print, right? So let's define those 4 rules that we just talked about, right? So the first is we want the level, a level or the opening print as our reference point. Jake, why don't we buy down here, this potential failure to go lower or anything right here? But we don't, one, it's counter trend, right? By buying this trigger right here above this bar's high, it's not technically a buy setup because we're not in an uptrend, right? So that would be breaking the rules of trading not with the trend. Buying here would also be breaking the rules as we don't have a level or the opening print as our reference point. You could argue that this was going to make a move back towards the open, but you are still counter trend, right? So this is a no-go entry for us here. However, when snow starts to move back up, and by establishing a higher high here and a potential higher low here, all of a sudden, we are now trading with the trend. Check. I'm going to put an X. You got an X there, right? Boom. We're trading with the trend. Now, on the larger time frame, actually, let me pause there. We're trading with the trend on our trend, the time frame of our entry, right? Rule number 1, do we have a level or the opening print as a reference point? Yeah, we don't go and touch the open exactly, but the opening print's right there. We have a reference point. We just got back above the open. A little bit of a pullback, didn't tag the open, but it's right there. It is our reference point. Rule number 1, check. With trend. Rule number 2, check. Rule number 3, when trading trend flips, wait for a setup to trigger, which means that in order to enter this trade, you enter when we break above this bar's high, waiting for the setup to trigger, right? Your stop would be below that bar low. Rule 3, check. Rule 4, time frame confluence. We want our time frames to be in alignment with each other. At this point in time, right here, the hourly chart was starting to form what we could see as a potential buy setup. The hourly chart was in alignment with this 5-minute entry. The daily chart had the failure to go lower pattern on the previous day and this strong gap up. Too many drawing sets. And this strong gap up. This daily chart, for all the reasons we talked about earlier on, was in alignment with this trade thesis. The weekly chart had the failure to go lower pattern in a green bar, potentially putting in a buy setup after failing to go lower. That was in agreement with that. So all of a sudden on this entry here, all 4 of these rules are checked. Bing, bang, boom. Right? And from a technical analysis perspective, not including risk management, not including R multiple, which we've talked about previously and we'll talk about more, right? But not including that, these are the 4 rules that we look to enter a trade based off of. And today, this was an entry that would have allowed that to be a very solid trade. Not A+ setup for me because the weekly chart and the overall market, nothing's really A++ right now, especially kind of later in the day stuff. But this was a very solid setup, a very solid day trade and potential swing trade setup that presented itself later on in the afternoon, and it abided by all 4 of our rules. They got them all. You got them all, right? So I do understand that, like I said, this shouldn't all be like clear as day to you now, but I'm hopeful that after this lesson, let me rephrase that. I'm hopeful that after first learning the buy and sell setups, and how do you get a 1 candle stop, and then learning about overall trend, particularly the mRNA example and how important it is to consider trend on a different level than many of you have looked at trend in the past, right? Because everybody learns higher lows, lower highs, lower lows, right? Higher highs. Everybody learns that in the beginning. But with the buy and sell setups first, then the trend analysis on mRNA, understanding how we use those lower lows, lower highs, higher lows, lower lows. then the level system to understand how we get our reference points, and now multi-time frame analysis to understand that all of this connects with each other. I'm hopeful that after tonight, you're kind of like, holy shit. I look at charts a completely different way. Nobody had ever broken it. I don't know if anybody had ever broken it down in the sense to you of why snow did what it did today. Why did it do it? We explained everything, right? The hourly needed a pullback. So the 5-minute flipped into a downtrend. Then when the 5-minute lower, smaller timeframes flipped back into an uptrend, that triggered an hourly buy setup, which allowed the hourly to continue with trend. Everything is rational and explainable. Everything is not necessarily rational. Sometimes moves are fucking irrational and crazy, but everything is explainable. There's reason to it. It's happening for a reason. It's not random, right? And this multi-time frame analysis stuff is the last link to really connecting all of that, right? So with that being said, my throat is killing me. So I'm going to wrap up there for tonight. Gonna cough drop and tea and all that shit to get myself fully ready to go for Thursday's lesson for us, in which it's going to be an options related lesson. For some of you who have been trading for a while, it might be a chunk of review. But we have to cover all the graphs with options, as that is the main instrument that we trade, right? But I'm hopeful that these last 3 lessons, when I said to you all in the beginning, and when I said these first 3 lessons, right? When I said in the beginning, these first 2 lessons are not going to be technicals, but I promise you, lessons 3 through 5 will be worth it. Was it worth it? Yeah, I do need to do those not trends, but was it worth it, right? For these last 3, were they worth it? Did they really start to tie everything together in a way that makes like charts like it just is, it's a different level. It truly is charts on a different level. So with that being said, I love you all very, very much. I'll get this recording posted ASAP, and I will get the other recordings posted to you all even sooner than that. As soon as we're done, before talking, you're going to see a bunch of stuff being posted, and you're going to get a bunch of new things to watch. So, oh shit, I never pressed send on my order. That was bad. Wait, did I? I don't know. I'll check in a second. I'm doing burgers for dinner. But that being said, if you all could give me a yeah, let's go one more time in the chat, I would love it. Be very appreciative. You know how I love to do this. Let's go. Lesson 5 is in the books. This one was a thick one for real, but it was solid. My gang, the veggie burgers. I love you all. I love you all so, so much. 2 minutes. I'll have some other stuff posted for you that'll be really valuable. I love you all. Any questions, do not hesitate to reach out. I'm going to try and have an early night tonight. No more joints, only edibles for the throat. So might not be the fastest to respond to questions tonight, but you all know me. I'm here. I'm around tomorrow. We'll get it handled for you. So I love you all. Have a great rest of the night, and we'll talk soon. Okay. All right. Cheers, my gang.